We're delighted to welcome Ross Embleton, who is a mining analyst at Wood Mackenzie, who is going to start things off with some discussion about the market dynamics for the rare earths. And then we'll be joined by George Bennett of Rainbow Rare Earths and Matt Horgan from Peak Resources to talk a little bit more in general terms about the rare earths market. So, Ross, over to you. Thanks.
Thank you very much, everybody. And firstly, I'd like to express my thanks to Adam and the One-to-One team for giving us the opportunity to speak here today. I'm going to provide a brief update on the rare earths market, starting to look at recent price movements before turning our focus to the sort of supply and demand dynamics that have been impacting the industry recently. And then I'll move things slightly longer term. So just to kick things off, usual disclaimer information. So, when looking at rare earth prices, I think it's safe to say that they've been through a particularly volatile period over the past 12 months. Since peaking in March 2022, the key magnet rare earths, so the likes of NdPr and Dy as shown on the graphs here, have really experienced a significant downturn, falling by as much as 48% since their peak to current levels. Now, this has been down to two primary reasons, and firstly, the direct state involvement from the Chinese government to lower prices, and secondly, the weakening of market sentiment within the Chinese domestic market. Now, on that second point, there are a number of contributing factors, such as the global economic uncertainty, the COVID-19 related lockdowns impacting on the automotive production facilities within China. And this all contributed to a sort of weakening demand image, while simultaneously the announcement earlier on in the year to increase the supply production quotas alleviated some of the supply tightness, particularly on the light rare earth side. Now, in expectation of lower prices, we had a sort of a chicken and egg situation where suppliers were looking to lower their prices to offload their inventories in expectation of lower prices, while simultaneously the consumers were using up their inventories instead of purchasing on the stock market. So this really led to sort of the hand and mouth ordering system instead of the placement of longer term orders. Looking at rare earth demand, the key point I want to take away from this slide is just the level of integration within the facility, and this is particularly focusing on China. So the chart here on the right-hand side is comparing the export of rare earth compounds and permanent magnet material from China. And as you can see with the two colours, the dark blue lines here are referencing the rare earth compounds. You can see that the monthly exports have really sort of settled around the 4-year average. While when looking at the export of permanent magnet material, particularly since the mid-2020s, you can see there's a bit of a disconnect, and suddenly permanent magnet material exports are much higher than the 4-year average. And this just really highlights the level of integration within the Chinese domestic market, where they have full access and exposure across the entire value chain, and the likes of CNRE being able to produce right the way through from mine material all the way down to MRI scanners if they need to. Another important point to note here is the level of internal competition within China has really sort of influenced this level of integration. So particularly in sort of the Baotao region, where local incentives and sort of cheaper energy costs has really tried to wrestle some of that control from other regions. And this level of internal competition has really helped these companies expand right across the value chain. So just looking at rare earth supply briefly, at both the mined and refined stages, supply has increased this year, with the former increasing around about 17% compared to 2021, whereas refined production has increased just over 14%. Of course, earlier on in the year, the Chinese government released their latest batch of production quotas, and as you can see from the various charts, there is sort of a few key takeaways. Firstly, it was an increase again, a 25% increase in 2022, following a large increase from the previous year as well, although this was entirely derived and assigned to the light rare earth. So as you can see from the charts on the right-hand side, which compare the hard rock, which is the light rare earths, and the ion absorption clays at the bottom, which is your heavy rare earths, you can see that it's the light rare earth production quota which has received all of this production increase, whereas the heavy rare earths have been maintained. Secondly, an important point to note is the level of consolidation within the Chinese market. And previously, there were 6 state-owned enterprises, and this has been recently consolidated down to 4. And this production increase, as you can see from the chart on the left-hand side, was almost entirely assigned to China Northern, where there were sort of minor increases to the China Rare Earth Group as well. Just taking a moment to look a little bit more in depth at the Chinese market in particular, and just sort of following on from my previous slide, the graphic here on the right-hand side really highlights just how there are sort of 2 primary production centres forming. And looking at the distribution of the mining quotas, you can see China Northern, obviously in the north, focusing primarily on the light rare earth production, and the China Rare Earth Group in the southern provinces really focusing on that heavy rare earth production. Now, it hasn't all been smooth sailing, particularly on the heavy rare earth side within China. So following the state-led crackdown in 2016, where sort of unregulated mining practices were really, I suppose, halted and suspended, we've seen a number of movements to increase on the mining side for heavy rare earths, but the trouble with that is sort of the disruptions that are currently impacting on the refined side, and this is really sort of shackling the heavy rare earth industry currently. So one of the primary movements from this is the sort of the transition away from the traditional ammonium sulfate reagents to more of a magnesium sulfate reagent, and this has had sort of variable recovery results, and this is really disrupting sort of the ramp up and the reopening of these refining facilities. So shifting our focus slightly longer term now, I just want to take a few slides to highlight the main opportunities going forward and what the outlook for the earth industry could be. So of course, it's difficult to get away from the hot topic of the energy transition, but rare earths really does sit at the centre of that. And as you can see here, the growth within the magnet applications is expected to really drive this industry going forward. Traditionally, the catalyst industry, so your auto cats and your FCC cats for petroleum fuel products, was the largest demand driver in rare earths. However, in recent years, magnets has really taken over, and going forward, there's really only one winner. Within the magnets industry, I have a couple of slides later on just touching on the main drivers, but as you can see, to achieve a CAGR of 5.7% over the coming years, it's really the automotive drivetrain applications and your offshore wind, which are your larger magnets, that are going to be the primary drivers. Within the catalyst industry, of course, the sort of the falling sales of internal combustion engines is going to have a negative impact longer term. In the next few years, we expect the intensity of use of rare earths within these internal combustion engines to kind of offset the impact of falling sales. However, longer term, the catalyst industry is expected to decline. On the flip side of that, so for FCC catalysts, the lower demand for petroleum fuel products from industrial applications as well as automotive applications is also going to have a negative impact, thus lowering demand in longer term. So just having a bit of a deeper dive on the sort of the 2 main factors within the magnets industry. This slide here looks at the automotive applications, and the chart on the left-hand side, really the key takeaway is just the sort of the rapid increase from the red line here showing battery electric vehicle penetration rates. And as you can see from the dark blue columns, over the next decade or so, sort of their market share really is going to grow quite significantly from around about sort of 7% currently up to 27% over the next decade. When you translate this into NdFeB demand from automotive applications, you can really see that, of course, the global trend is increasing, but China is the main driving force. The likes of Europe and North America will also have a significant role, and this has encouraged the NdFeB demand really to ramp up quite significantly over the next few years. It's important to note that sort of the chart on the right-hand side is only looking at sort of your drivetrain applications. There are also a number of other smaller magnets within vehicles, so the likes of fuel pumps, power steering, small clasps, heat motors for your seats. So it's this is only part of the picture of the automotive industry. Swapping to look at sort of the wind energy demand, which is really seen to be a key to sort of wrestle that reliance on fossil fuel energy generation. As you can see from the chart on the left-hand side, offshore wind is expected to really increase quite rapidly over the next few years, and the recent energy crisis within Europe has only, I suppose, encouraged that development from European nations, particularly Germany and the UK and the Netherlands in the Northern Europe states, where we've seen really rapid development of securing land packages for these offshore wind projects. When you look at how this sort of moves into NDFEB demand, and the chart in the bottom right here, the key point of the graph to focus on is the light blue columns at the bottom, and how although demand is expected to remain relatively subdued over the next couple of years, just given sort of the time it takes to establish these facilities, you can really see sort of beyond 2025, towards the end of the decade, sort of demand from these offshore wind energy applications is expected to increase rapidly, almost fivefold over the next 10 years. Just taking a look at sort of how supply is going to be able to respond to this rising demand picture in the future, and I've just sort of broken down the key three key stages here with mined, refined and recycled, and showed sort of the level of Chinese production within each part of the supply chain. Of course, the first point to note is that China is the dominant force across the supply chain, although upstream in mine supply is more diverse, particularly within the pipeline developing projects. It is diverse in terms of geography and mineralogy. So as you can see from the percentages on the right-hand side, it's looking to fall to around about 55%, which is, of course, still a dominant position. For the reasons I outlined earlier, as you move further downstream, particularly within this space, China becomes increasingly more dominant. So within the refined production, they're looking at around about 80-85% of current production, and almost the entire recycled supply chain as well. Now, across the suite, supply is expected to increase rapidly over the next few years, with a number of developing projects at all stages looking to come online, not just within the Chinese market, but also rest of world as well. You can see that at the refined supply, particularly in sort of the mid-2020s, there's quite a significant drop-off in the sort of percentage of Chinese-derived production, and this can be explained by a number of development projects, particularly within Australia, North America, and some other European operations as well. We really expect recycled supply to be an increasingly important source of material going forwards, and there are a number of reasons why this is an incredibly, so I suppose, young but growing stage of the industry. So I know this slide looks a little bit busy, but I'll walk you through sort of just the key points I want to make here. And the chart in the top left-hand corner here just shows the percentage of rare earth production from refined and recycled sources. And you can see it's only a growing picture for recycled supply throughout the outlook period. Now, currently, the majority, or I suppose almost the entirety of recycled supply feedstock is derived from swarf material. So that's sort of offcuts and grinding media manufactured during magnet manufacturing. However, longer term, and we're talking sort of beyond 2035, end-of-life material. So this is magnets from EVs, from wind turbines, from other smaller applications, is really expected to become an increasingly important source of material, helping to sort of facilitate that growth. Now, currently, there's a bit of a disconnect across the industry where so there's a lack of consideration in component design for recycling flow sheets, and this has meant that the uses of epoxy resins and plastic housings really makes the magnet extraction from components quite challenging, and this is quite detrimental to recycling flow sheets. So, as I say, there's a bit of a grace period at the moment where sort of technological challenges are going to have to be overcome over the next decade or so in order to really take advantage of that increasing material availability longer term. Just looking at the sort of regional distributions here, currently China, of course, is by far the largest producer of rare earths from recycled material, and this is just due to the the control over the sort of magnet manufacturing industry and giving them access to this swarf material. And although other regions, particularly North America and Europe, will increase their market share longer term, we expect this part of the industry to remain largely China-centred. Just a few concluding remarks, which I'll leave on the slide for you here, but the key points to take away is that it's an incredibly significant time in the rare earth industry where demand is expected to go through quite a rapid growth, particularly over the next 10 to 15 years. There's an awful lot of supply challenges in order to meet this. But it's an increasingly sort of diverse and energetic market, so it's a great place to be over the next few years.
Thank you very much, Ross. Do we have any questions immediately based on those slides before we bring up the other panellists? Ross, you talked a little bit about the fall in sort of a fall in prices recently.
Yes.
How has that affected sort of investment appetite for new projects, or are people looking at more of a long-term, the demand's coming out long-term and the potential price rise?
Yes, yeah. The rare earth industry is volatile by nature, so I think the short-term price movements, of course, can cause concern, but it's really the longer-term image which is driving the incentive for the market. We've seen a level of sort of seasonality within the rare earth industry, where typically in sort of Q2 and Q3 prices tend to fall off, but then towards the end of the year again they pick up ahead of the sort of early spring festivals within China. So the short-term price movements can largely be I suppose taken with a pinch of salt, but it's the longer-term fundamentals which are incredibly important for this industry.
I've got a few more questions, obviously, but let's get our other panellists up here. Okay, Ross, if we continue, I've got a question for you. In your slides there, you had some that graph there on the prices, but obviously the rare earth elements. There's a lot of elements there. It's a long strip along the bottom of the periodic table. Do you have any sort of breakdown on how the different metals have performed in price terms?
Yes, of course. Yeah, it's I suppose no surprise there when you look at the sort of the future demand picture that it's the magnet rare earths which are generating the most significant interest. So the likes of neodymium, praseodymium, dysprosium, and terbium, they really are the sort of the four key elements looking forward. If you start to compare against the other rare earth elements, the image is much more, I suppose, much more diverging. The likes of lanthanum and cerium, which were historically important elements for different applications, are really seeing an increasingly oversupplied market as the rare earth industry targets these other sort of magnet rare earths. And this just really, I suppose, provides very little upward momentum for other rare earth elements. So, as I say, when you look across the suite of 16 elements, the image is quite diverging, but it's really the magnet rare earths which has the most interest.
So obviously, when you're looking at if an investor's looking at a rare earths project, they need to look very carefully at what metals they're producing. And Matt is nodding wisely there, because tell us a little bit about Peak Resources. Which metals are you looking to produce? And tell us a little bit about your project there in Africa, Tanzania.
Yeah, sure thing. So Peak Rare Earths, ASX listed, focused on developing our Niguala rare earth project in Tanzania. We have actually just completed a BFS update on our project. My nods are, in agreement with the caution one needs to take around assumptions of cerium, lanthanum, and other low value products in the financial model. I suppose we're quite lucky in that our basket of rare earths is very high in NdPr. So our basket is around 22% NdPr, which makes it sort of amongst the highest in class. That will be our focus, in sort of the project that we're developing. I would say that there is some exciting developments around some of the lower value products and sort of use in alloys, and seeing application for some of the SIG and heavy, which is exciting and will help narrow that gap between NdPr and all the other elements in the basket. But certainly in the short term, it is NdPr being the focus for us in our project.
Absolutely. And George, at Rainbow Rare Earths, tell us what you've got.
Well, we've got a small trial mining operation in Burundi, but more importantly, we've got a flagship project in South Africa that we're developing, which is our Phalaborwa Rare Earth project. There we've got 29% NdPr in our basket, and we've got dysprosium and terbium. So we are one of the few companies that, or development projects that are going all the way through down to separated rare earth oxides. Most projects either produce a concentrate, and that concentrate's then shipped somewhere else in the world to be further processed for cracking to a mixed rare earth carbonate, and then the next stage is to go to mixed rare earth oxide. We're doing this all on one site, and then our 4 rare earth elements that, in our basket, it represents 95% of the value of our basket. So it's a very good project. I've just released a PEA, and the numbers are quite outstanding. So for anyone who wants to have a look on our website, they can see for themselves.
Absolutely. And your project, I believe you're actually not mining primary sort of hard rock. You've got it's been pre-mined for you, and you're processing the rock. Yeah.
One of the reasons why our numbers are so good is because we actually effectively a tailings operation. We've got 30-odd million tons of gypsum in Phalaborwa, which was a result of hard rock mining and phosphoric acid production, which produced the gypsum waste with the rare earth elements in the gypsum waste. And these rare earth elements are grading at about 4.5% TREO. And when you compare that to ionic clays, because they've got very low mining cost as well, we are between 6 and 10 times higher grade than ionic clay deposits. So in any mining project, if you've got grade, it's always one of your key things that you look for is grade. So we've got great grade, and we've got very low cost of getting it into production from a low capital number as well as a low OPEX number.
I mean, I guess the issue with rare earths projects that investors always raise is sometimes the complexity of the processing. Matt, tell us a little bit about Peak. You're taking a bit of a sort of staged approach to your development, yeah? Starting off with just sort of concentrate operation and then moving forward.
Yeah, very much so. So our ethos is walk before you can run. So what we're doing at Peak is, I think it probably differentiates us from a number of our peers. We're doing a sequenced development pathway. In the short term, we will develop a mine and flotation plant in Tanzania, produce a high-grade mineral bastnasite concentrate, sell that to third-party refiners. What that allows us to do is it allows us to get that up and running first, optimized, before we start thinking about the downstream. It also allows us to take full advantage of what we think is very attractive short to medium term opportunity that there is in the market for high-grade mineral bastnasite concentrate. I would say that not all projects are able to take advantage of that market. You need a particular type of mineralogy. Rainbow's Burundi mine, I believe you were able to produce a very high mineral concentrate as well.
Yeah, very high. Yeah.
But many projects can't. So we feel quite lucky that we're able to do that and take advantage of the short-term deficit there is for mineral concentrate.
But then moving forward, you're doing a feasibility study, I believe, on a sort of mixed rare earth concentrate, and then in the future, potentially producing your oxides.
Yeah, that's correct. So one of the key focus areas for us has been working with the government and satisfying their wishes to look at in-country refining within Tanzania. What we're working towards as part of our framework agreement discussions with the government is in parallel with that sequence development pathway, undergoing a feasibility study with the government, looking at in-country refining within Tanzania. Based on the outcomes of that feasibility study, we will either commit to in-country refining if it shows to be feasible, or alternatively, look elsewhere where it makes sense to do that refining in the medium term.
And at the moment, there's obviously this sort of global scramble for critical minerals, and each country and each region, Europe, Japan, America, China, they all want to have their own domestic sort of supply chain. How is this global scramble for rare earths impacting your sort of development pathways? Does it add more opportunities, or does it add more sort of complexities as you may get sort of government saying actually process it here, process it there?
If I could come in here, most governments don't actually understand how complex rare earths are. So a lot of these governments talk about developing this independent supply chain. but the skills needed and the development of the downstream is all controlled by the Chinese at the moment. So it's going to take many years to roll that out, in terms of, so once you produce a separated rare earth oxide like we're going to be doing, you still have to send that to a metal company. It turns into metal, then they alloy it, and then it has to be sintered for the permanent magnet. So there's still quite a lot of downstream further to take place. And as I say, the Chinese have spent 30 years getting control of this market, and it's not going to take 1 or 2 years to develop that in the West. So it is difficult, and the West needs to put money behind it. They talk a lot, they make a lot of statements, the EU, the UK government, and so forth, but somebody's got to start actually saying we are going to put X billion dollars or euros behind this and actually spend the money to create this downstream and get the technology going. I mean, in the last rare earth boom in 2010, 2012, I think something like 1,000 new rare earth projects were IPO'd around the world. Only 2 mines were built and only 1 survived, and that's Linus. And we're seeing the same thing now. There's a bit of a rare earth scramble, but I can tell you now, most projects you see will never go into development.
Yeah, I remember the last rare earth, and suddenly everyone had rare earths in their name. Yeah. It's always the way. It's always the way these things.
Now, I know the Peak project well because my last company I ran and sold to Amic Foster Wheeler was M&M Engineering, and we did the bankable feasibility study on Peak. And the technical team who did that study worked for me at Rainbow, so I know your project well.
Yeah, it's a good study, so
Absolutely.
Thanks for that.
I mean, talking about technical expertise there, Matt, I see you've recently signed an MOU with Shenghe in China. What's that about?
Yeah, that's right. We like to think of it as a strategic collaboration and development MOU. For sure, offtake is a big part of that. So notionally, we have agreed to 75 to 100% of our product going to Shenghe, who is our largest shareholder. But then the MOU also covers things like technical support, and then also the potential for sort of financing support as well. I would point out that our strategic MOU, we like to think, mirrors Shenghe's relationship with MP Materials. MP is the largest rare earth company outside of China. Shenghe played a critical role in sort of the restart and revival of that company back in 2016. They also take 100% of MP product currently into China, support MP through technical support and financing support as well. We think that is a good precedent and case study of a very successful relationship between Shenghe and MP, and is one that we would like to also emulate with our relationship with Shenghe going forward.
But in terms of sort of developing technical expertise in other countries, in the UK, for example, what are we seeing in that space? Because obviously the Chinese dominate this field in the processing space. What's happening in other countries to kind of get that expertise up?
I'll jump in here, I suppose. The UK and Europe in general, I suppose, particularly within the rare earth space, has a bit of a NIMBY problem, not in my backyard. We don't expect there to be significant developments within Europe for the mining stage. However, as you move further downstream, there do seem to be more opportunities. One space, particularly where the UK is quite well positioned, is, as you say, the gap further downstream, where you have these metal alloy powder magnet manufacturers and the likes of less common metals sort of do have a level of that expertise and could play an important role going forwards. I think that's a really important point to note, actually, particularly sort of within North America and other rest of the world regions. It's the lack of sort of downstream customer to really complete that supply chain. Inevitably, if you generate a separated oxide or a mixed oxide product at the moment, there really isn't a lot of options sort of outside of China, but that does seem to be changing. The other part of the supply chain, which I think Europe and the UK could benefit from, is the build out and recycling. We've seen the likes of Hypermag doing a lot of work. Then there's often a lot of research and development at the moment, sort of mainly looking at sort of the smaller magnets from sort of speakers and headsets. But there's certainly a space to improve that moving forwards. It's just about overcoming those technological challenges in the short term to really have that access to material feedstock.
I mean, there was some talk of some processing in the UK previously. What's sort of happened with that? How's that developing?
Well, we know that there's a development happening at Salt End, but I'm not sure where they're going to get their feedstock from at this stage. So, they're building one part of the downstream, and for that to be successful, they're going to have to get enough feedstock to make that work. And I hope they do, because it's good for the UK. It's good for the Western market. So, yeah, we're hoping to see that be a successful sort of downstream project coming online in I presume it's a couple of years' time still, But so that's the first real investment we've seen downstream in the UK with trying to address this problem. But we need to see it in the EU, and America is starting to do it. And we're expecting to see some major announcements from permanent magnet manufacturers in the next couple of weeks, announcing expansions, possibly in the US, possibly in Europe. But you need the customer, which is your magnet manufacturer, to actually expand, and he'll only expand if he knows he can get reliable supply outside of China. So it's a chicken and egg at the moment, and the only reliable supply outside of China of separated oxides is Linus, and that all goes to Japan at the moment. So you need projects like Rainbow. You can be one of those suppliers, and other projects to come on stream. But even Peak, they're only starting with a mixed rare earth concentrate. They're still going to take a while before they get all the way to separated rare earth oxide, which is your first step in the next stage of beneficiation downstream.
When we did our BFS in 2017, which at the time was looking at integrated development and a refinery, we did a pretty comprehensive site selection search where we looked at many jurisdictions around the world. UK came out on top. My view is that UK is very well positioned, for rare earth separation. A few key points to that: very strong technical workforce, particularly in sort of the process and engineering industry. Access to reagents, which I think is probably the biggest banana skin in rare earths, and one that many people overlook. But then also access to infrastructure, ports, things like that. We obviously have our Teesside site. We think that there is a lot of strategic value in that site. We think it is the perfect location for a downstream rare earth refinery. Following that feasibility study with the government, and depending on the outcomes of that study, we could still well look to build a refinery in the UK. Because, like I say, I think it's perfectly positioned to be a site for downstream rare earth development.
And how does it fit in with sort of the government's levelling up agenda, bringing jobs and industry back to some of the former industrial heartlands of the UK?
Yeah, I mean, we had fantastic support from the local government around Teesport and in Teesside for that development, and still maintain good and strong dialogue with them. I think, like you say, it's a good way to bring jobs back to what I think is a strategic area for critical downstream metal development.
Given that the demand for permanent magnets is going to ramp up significantly, you showed in your slides, what can the industry do, or what does the industry need to do to kind of accelerate the development of more rare earths projects to meet this demand? Is it possible to meet the demand?
Personally, I don't think you can't accelerate. The projects are in development, are going as quickly as they can, to be honest with you. But as I mentioned earlier, there are a lot of development projects. Very few of them will actually come on stream. Rare earths are very difficult from a mineralogy point of view, technically challenging to separate downstream and so forth. So there's a reason why there's so few rare earth mines outside of China. And so we need probably in the next 3 or 4 years, 2 or 3 new projects on stream. And by 2032, another 2 or 3 projects coming on stream. So you're talking maybe 6 projects in total that I can see coming on stream over the next 8 years. And we'll be lucky if we get 6 projects into production. And there's hundreds out there.
I can think of two catalysts, to sort of promote and accelerate rare earth development. I think one is innovation and thinking of different ways to develop rare earth supply chains. I think what Rainbow are doing in South Africa is very innovative and very impressive. I think, you look at some of the projects around monazite recycling, I think are also ways to, bring rare earth development online. I think the other one, and obviously funding support. It can be a challenge when, lenders need to see offtake solutions to underpin funding and financing. But I point to the Australian government and the funding package they put forward to Iluka. As a rare earth pair, we would love, similar funding from the government. It is very attractive. But then I think for the broader industry, it's great to see the Australian government doing their best to catalyse rare earth development within country.
Are you seeing more end users getting into the space looking to fund projects? Car manufacturers, utilities? Should they be?
They're talking about it, but we haven't seen them put their money where their mouth is yet. We've seen them do it in lithium. They're looking at lithium, but for rare earths, they haven't done it yet. I think it's something that they are obviously considering. We've spoken to a couple of OEMs as Rainbow, and as I said, but they're obviously trying to target projects that will come on stream. At Peak, as I said, I think it's a very good project. They've got good grade, they've got a good resource, and that's probably one of the other projects in Africa, I think, that will come online. But as I said, there are very few. So they are, I think, taking their time trying to pick the projects that they think will get into production. And but then the terms that the OEMs are offering are not attractive, to be honest with you. That's right. They're not attractive. So, yeah, I don't know.
We've had a few discussions with OEMs, and I think what is interesting is I think lithium has been such a headache for OEMs, and has spent so much time, getting their head around lithium and securing lithium supply chains. Rare earths, and more broadly magnets, have quickly become the elephant in the room. I think OEMs are only just starting to get their heads around, what we like to think is the other half of the equation. You've got your battery, but then you've also need your motor. We are starting to see OEMs move quite quickly. I can point towards Hyundai and their role that they're playing in Arafura in Australia. That consists of offtake, but also technical support through the way of an engineering study and possible project level investment as well. You see GM and their partnership with MP Materials within the US, Volkswagen, what they're doing with Vittel and Retec in Europe. I think very quickly you'll see OEMs start to turn their attention to rare earths, which I think is a good thing for rare earth developers such as ourselves.
I mean, they probably need to hurry up. They're probably realising they need to hurry up. It's probably right now they're getting all their magnets from Chinese manufacturers, but as the demand grows and that supply stays pretty steady, they're suddenly going to be short. And it takes a long time to get these projects up and running. Yeah?
Well, they risk, you're quite right. They risk the fact that China is going to consume all its NdPr for itself. Last year, the Chinese sold more electric vehicles in China than the rest of the world put together. So that demand in China is growing. So there's a risk that, as you say, that the Chinese will say, well, look, we're not trying to be clever. We just want the NdPr for our own growth, internally. And that's the risk the OEMs outside of China face. And so, it is an elephant in the room. And I first spoke to a couple of OEMs 2 years ago, and we weren't even on the radar, as rare earths. I didn't even think about it. But now, as you know, they are starting to realize that it's an important strategic mineral that they've got to start looking at. But as I said, I know the MP deal with GM, I don't know the terms of the deal, but as I say, we've had approaches from OEMs ourselves, and the terms are very, very stringent and that. So I don't know if Rainbow would do a deal with an OEM just at the moment.
I think this raises a really important ESG issue as well. And so the energy transition overall is sort of, I suppose, increasing the public awareness of critical raw materials and sort of the supply chains that go into your iPhones and your electric vehicles. And particularly for rare earths, I suppose that sort of the big dark cloud is the sourcing of heavy rare earths at the moment and where that's coming from. But as you say, as sort of supply chains develop outside of China, that could be seen as a real positive for OEMs to focus on trying to produce their magnets from a ex-China perspective, and if that's possible, it could be a really important feature going forward.
Fantastic. Tension building in the rare earths sector. Do we have any questions from the audience before our panelists need to rush off for their next meetings? Question in the back.
No, I don't think it's fair for us to comment on other operations or projects. Yeah.
No comment on that one, I think. We'll have to ask Pensana. But thank you very much to our panelists. I think you've got to dash off and have some meetings now. But thank you very much, our panelists. Round of applause.